Hey everybody, Dave Bartosiak here with trending stocks at Zacks.com. Everybody's always looking for the next big thing, the next Amazon, the next Facebook, the next Backstreet Boys. When it comes to emerging market stocks, we hear those parallels often. That's because, to tell the truth, we really have no idea what these companies are up to. Like Baidu, it's the eBay of China. How do we know? I don't know, because some dude said it was. I don't speak Mandarin. I haven't been to the Great Wall. I really have no idea. I just got to take that guy's word for it. Now, here's another parallel for you. Jumia, ticker JMIA. Apparently, Jumia is trying to become the Amazon of Africa. That could be because they, like Amazon in its early days, don't make any money. Founded in 2012, Jumia is the leading Pan-African e-commerce platform with about 80,000 sellers and 4 million active customers across 14 countries. Similar to Chinese giant Alibaba, Jumia has its own payment service, as well as a Grubhub-like food delivery platform. Even though its target market is in Africa, Jumia is actually headquartered in Dubai, and its central technology office is over in Portugal. So, is it an African company? Could it be the Amazon of Africa? I don't know. Let's go ahead and take a look at Zacks.com to see what we've got going on here with the numbers on Jumia. Now, in its Q3 report, Jumia pointed out some of the shortcomings for the company. Top line metrics softened across the board, just something that we're going to see here when we take a look at the sales growth. So, admittedly, 7.69% contraction in sales is not something that you want to see in a growth company or a high growth company like a Jumia. But let's obviously this year was kind of strange, so let's just go ahead and pretend that didn't happen. Let's take a look at next year. So next year you're talking about 25.98% revenue growth. That is solid. Now that's on the revenue side, but take a look at EPS. Even during this terrible year, you still have 40.18% earnings growth here. Next year, forecast to come in at 14.22%. Now, is earnings growth a misnomer here? Because it's not really earnings. But it is a loss that is shrinking. So current year estimates call for a $2.04 loss, while next year that's supposed to shrink to a $1.75 per share. So those are, I guess that's a good thing. It's moving in a positive direction. Now, if I scroll up here, again, this is a Zacks rank number 3 hold right now. If you look at the style scores, an F for value, which is kind of obvious given that it doesn't make any money and is trading at 38. B for growth, which we saw not only in the EPS numbers, but in next year's sales numbers. Momentum right now is C for a VGM composite score of D. The internet commerce industry ranks in the bottom 24% of our Zacks industry rank. That's okay too. We're not so worried about the entire industry as a whole here. We're just worried about what Jumia is going to be able to do. Now, with this stock up here around 38 bucks, its market cap sits at about 3.4 billion. So that puts it at a price to sales of 35.7 times. To put that in perspective, Amazon trades at 4.5 times sales. Alibaba is up at 8. Every time you share this video, Jumia delivers a fake Gucci jumpsuit to a wannabe R&B singer in Nigeria. Follow the author, subscribe to the YouTube channel, and Twitter at Bartosiastics. But don't forget to check out Zacks.com/promo for this week's deal on stocks under 10. We will catch you next time on Trending Stocks. I'm Dave Bartosiak.